Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. We're going to take a look at the Aussie versus US dollar, New Zealand versus US dollar from a technical perspective. Today's date is August 2nd, 2024. Let's get started. Well, things are certainly moving today after that weaker than expected report. We're also seeing factory orders come in a little bit weaker than expected at minus 3.3% versus minus 2.9%. Bring it on. Bring on the weak data. U.S. yields are moving lower with the 10-year yield now down minus 13 basis points. The 2-year yield is down around 20 basis points, and stocks are getting hammered with the NASDAQ index down about minus 450 points, or I don't know, what is it, 2.25% or something like that. Anyway, let's take a look at the Aussie versus US dollar. I'm going to look at the hourly chart here, and as I mentioned, what can happen with the Aussie versus US dollar and New Zealand versus US dollar is it moves lower if stocks and there's lots of worries in the equity market. Why? On risk-off sentiment. That's why also commodities tend to go lower when you start to enter into a recession, and that may hurt those commodity currencies like the Aussie versus US dollar, or the Australian dollar, the Canadian dollar, New Zealand versus US dollar. So we're not out of the woods here, and we are seeing a fairly modest increase in the Aussie versus US dollar to the upside. That move to the upside is taking the price above the 100-hour moving average, but as you can see, we're still below the 200-hour moving average. That 200-hour moving average comes in at 0.6549. The 100-hour moving average comes in at 0.6527, and so we're in this neutral area actually for the Aussie versus US dollar. We'll take a move outside that range to either increase the bullish bias or increase the bearish bias to the downside for this pair. So it's pretty simple for this pair from a technical perspective. Use the hourly moving averages as your guide. Let's take a look at the New Zealand versus US dollar next, and I'm going to put it on the, well, I might as well put it on the hourly chart to start things off for this currency pair as well, and see where we stand in regard to those moving averages. And as you can see, this pair has had a quicker rebound to the upside here for it. It started a couple days ago when the price did start move above the 200-hour moving average and continue to move to the upside. We are now approaching the 100 bar moving average on the 4-hour chart. That level comes in at 0.5987. Also, the 38.2% retracement. That is of the move down from the most recent high. I'm going to zoom out a little, or take a broader view of this from the high price going back to June to the low price that we saw in the month of July. The 38.2 comes in at 0.5995. Let's call it 0.600, a nice natural level on the top side. So that's at where we're going, or the targets on the top side for the New Zealand versus US dollar. Stay below the 100 bar moving average and the 38.2% retracement, and the sellers are still in play. Let's just call it that. But the move above the 100 and 200-hour moving average gives this pair a little bit more of a, it gives the buyers some reason for hope. But we are looking toward key resistance on the top side. In other markets, taking a quick look at the NASDAQ index, we're now down around 456 points. You can see how the price gapped below its 100-day moving average. That's the blue line in this chart at 16877. The price did move to a high of 16920, but that was short-lived, and the price started to rotate back to the downside. We're also back below the 50% retracement of this move to the upside at 16946. Both those levels need to be broken to increase the bullish bias or give the buyers some hope. As you can see, we moved in between those levels. This line right here represents 50% retracement level. So we moved above the 100 but below the 50%, and we started to rotate back to the downside. Now trading at session lows minus 2.83% in the NASDAQ index. Taking a look at the S&P index from a technical perspective, this price is still above its 100-day moving average and above the 50% retracement. Both those levels come in near the same level at 5310.25. So be aware of that. We're currently still about 35 points away from that level. Do you get the feeling that we're going to go down and test it? Last time the price got close to the 100-day moving averages back here in the month of May, and the market moved to the upside here. Get the feeling that it's not that, it doesn't have that same feeling this time in the S&P index in the U.S. stock market. Dow Industrial Average is down 500 points. So there you have it. I'll look at some of the Aussie versus U.S. dollar and New Zealand versus U.S. dollar from a technical perspective. And this is the U.S. stock market. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.